Good morning, everyone, and welcome to the European crossover webinar. And welcome to NFP Day. And we've seen the euro after a little bit of a dip yesterday. We had our support, I think it was at 12.11. It got as low as what, 12.06, and we kind of rebounded a little bit from there. We're seeing the dollar a little bit mixed bag in it here, and we have seen the dollar yen continue to go and add on to its gains here. I know that Chinese president had mentioned that he sees good progress, and they're looking for a sooner resolution. So that really pushed us. Boy, we made it all the way up in here to this 1180. I remember that we've been having this. I think it's 1172 as our resistance for a point where they could get to, and boy, did they pushed all the way up to 1180, really stretching this area. We'll go on and take a look at, we think, where they can possibly go to and where we believe critical resistance is, and we can see that right now, which is this 1187. Really, and they just about made it up there too. I mean, they made it up to 1180 or almost 1181, and it says 1187 that I think is going to be key. We may get above that. My point is going to be is whether we can maintain above that, but certainly the momentum's going higher in this whole thing with the China talks. It looks like it's trying to gain its own momentum as they try and find quicker deals, and the market is certainly pushing and leaning onto that as we see the S&Ps moving into their highs. This market just keeps adding on and on and on. Next key area coming in right around that 2890, 2890, 2891. It certainly looks like it's destined to push higher, but it's unbelievable, this move. It really is. And crude just starting to ease back a little bit, just a bit here. Certainly helping the dollar CAD a bit. And with that, we'll move into the news. So on the morning bid, flexible one-year Brexit deal in play. The Brexit news flow took an esoteric turn yesterday as a leak in the roof of UK Parliament caused a suspension in proceedings as the sound of dripping water drowned out one unfortunate speaker. That means, among other things, that the Assembly could not make the necessary preparations for any fresh test votes on Brexit options on Monday, pushing them back to Tuesday at the earliest, just a day before a crisis summit in Brussels to agree ways forward. Separately, the word out of the cross-party talks between Theresa May's team and the outgoing group of Labour lawmakers was that they are hard-going with neither side budging much. The big headline this morning is that European Union President Donald Tusk is likely next week to offer Britain a flexible extension of the date of the country's exit from the EU of up to 1 year, with the possibility of leaving sooner. Yet such a plan, even if materializes, is by no means guaranteed to take effect. Britain would have to accept to take part in EU elections nearly 3 years after its voters chose to leave the bloc. And France is reaffirming this morning that EU capitals would need to have a very good explanation of why a delay is being offered at all. Plenty of things to worry about for EU finance ministers meeting in Bucharest today, among them signs of a slowdown in Germany and the risk that Italy will descend in an all-out recession. Germany's industrial output for February was marginally better than expected this morning, but only because a particularly strong construction component more than offset a fall in manufacturing. Eurozone ministers will also decide on whether Greece has done enough on agreed reforms to warrant the release of €1 billion of funds to it. Last month, they deferred payments on the grounds that reforms were not happening fast enough. Upbeat comments from President Trump overnight about trade talks with China have fueled gains across financial markets and add to the growing optimism that the deal may be near to an end. The protracted trade conflict that's rattled world markets. Following this meeting with Chinese Vice President Premier Louis Hu, Trump said a deal could be sealed in the next few weeks, an eye-catching forecast, but he gave the concrete details, and the waiting game for investors continue. It was enough to push German and U.S. bond yields to 2-week highs, the U.S. dollar to 3-week highs against the yen, and European stocks higher at the open. 1 week on the week, the European stocks are set for the best performance in 3 weeks. Liquidity was lower than usual overnight, with Chinese markets closed for a national holiday. Better than expected industrial output from Germany will provide a salve after dismal factory numbers on Thursday, as Europe's largest economy suffers from trade tensions and Brexit angst. A report that the European Union is likely to offer Britain a flexible extension will further soothe worries about Brexit. Earlier on Friday, Goldman Sachs cut its chances of a no-deal Brexit to 10% from 15% as Prime Minister Theresa May continued cross-party talks with the opposition Labour Party. The main focus on the day will be the U.S. non-farm payroll report, which is forecast to recover by 180,000 from March following February's distorted 20,000 rise. Investors will also be watching for hourly earnings, which has climbed to 3.4% in February, the fastest pace since 2009. Hopes for a solid number were boosted by data on German jobless claims, which fell to a 49-year low last week, pointing to sustained labor market strength. So we'll see how that plays out. Dollar hits a 3-week high versus yen on trade optimism and U.S. jobs data awaited. The dollar scaled a 3-week high versus the yen on Friday, lifted by expectations that a protracted trade dispute by the U.S. and China would be resolved soon. The greenback has gained about 85 tenths against its safe haven Japanese yen this week, thanks to factors such as strong U.S. economic data and broad improvements in risk appetite. The trade war between the world's biggest economies has been a major distraction for financial markets over the past year, with riskier assets particularly taking a hit on worries about broadening business and growth impact of the conflict. President Trump said on Wednesday both countries are getting very close to a trade deal that could be announced within 4 weeks. On the economic front, investors will have an opportunity to gauge the health of the world's largest economy when the U.S. jobs data is released. In particular, the focus is how strong earnings component of jobs report turns out to be. A strong wages outcome would underline robust private consumption and hasten the rebound in treasury yields and in turn allow the dollar yen to test highs, said Junichi Ishikawa. The greenback extended overnight gains and rose to 1180 yen, its highest since March 15th. The dollar was rebounded 1.8% since slipping to a 6-week trough of 109.70 yen on March 25th. The U.S. currency has sunk to a low in the wake of a sharp slide by treasury yields caused by risk aversion, triggered by growth concerns. Treasury yields have bounced since, with encouraging economic indicators and trade optimism helping propel Wall Street shares rebounds to 6-month highs. Hopes for a trade resolution and further boosted stock prices, but the gains now took to stretched, said Makoto Noji. The risk-on phase could be reaching a climax, even if the United States and China do reach a trade agreement that could trigger the sell-the-fact moves. The dollar index against a basket of 6 major currencies was unchanged at 97.28. The pound was changed, a little change at 30.76, and let's go on and move on. Well, the data in Europe has continued to remain weak, and now the euro has come off those lows. We kind of rotated back from that area that we had as 1247 and came down as low as 1206 and kind of bounced in the middle. The risk to me is still, unless we get a job surprise that comes in weaker, to me, I don't expect it to be as strong, but then jobless claims came in, as I said, to a 49-year low. So, the risk is still that we can go lower. My thinking is that we can go in and take out the low here. And then we see what kind of action we have down here. My thinking is that you may not see further movement now. Remember, our target has been down here to 1149, but I think that's susceptible if we do get a decent jobs number. If they get 180,000, we can slip down here, and then we'll. But then I don't expect a whole lot of movement. But it's tricky right here. But I think we could go in and press to new lows. Now the target is 1149. That's the overall target, and I think that the trick, as I said, if you want to call it the trick or not the trick, is that we take out these lows, and I think the market would try and push to take out these lows. I just don't know if we find enough follow through or momentum on the downside. So to me, the key is going to be if we get a good strong number. If we get a good strong number, here's my thoughts here then. It's going to be 1193 and 1149. So let's go with this. Well, I don't want to throw both numbers there. Let's just go with this target here. Whether they get there or not, I think on a good number, we could go in and challenge those lows. That's the concern. On a good number, they would challenge it. I'm not sure that we'll stay down there. And I think that at that point, and I think on a longer term basis, the euro could eventually weaken. But when we're looking here on this data, if we do get a healthy number, my thinking is we'll challenge these lows. Now, I'm not sure that we'll go much further beyond if we take out those lows, but that was our overall target, which was 1149. Now, on the upside, key resistance on the upside to me is going to be this 1278 right here. Because I don't see that the euro is going to take off unless if we were to get a surprise number. But with jobless claims at this 49-year low, it doesn't look like we could. And the concern is also that if we get good wage growth, it's going to put the Fed back on track. Maybe not back on track, but back on a mode where we have to consider one more raise before the end of the year. Whether they do or not, we'll see. But it'll suggest that inflation would be coming down the pike, and you could try and rally back up a little bit. But eventually, then, if you have the Fed raising and you have the ECB going the complete opposite direction, then eventually I think you could make a rally in here, but then again, you would start to eventually find yourself starting to slide back. So we'll go with 1278. The proof's going to be in the pudding. It's going to be in what kind of jobs. And we get also revisions for last month, but the key is going to be that wage growth. It'll be nice. I mean, if we get revisions of last month, let's say it takes it from, what was it, 28,000, it takes it up to, let's say, 80,000 or 85,000. And more importantly, we get good wage growth, then boom, it puts the dollar back in the driver's seat again, especially with the wage growth, because it would suggest that inflation's coming down the pike if we get good, solid wage growth. Let's go and move into the cable. Well, to me in the cable, we're going to go right back here. It's right down here, 29, 29, right there. Mm. Go 29.54, 29.54. And once again, we're looking at some stretch levels. If for some reason we get a strong surprise, the dollar starts taking off, where can we go to? So we're going to say 29.54. On the upside, same thing. We're looking a little more on these extreme stretch moves. And this may not be as extreme, but it'd be right there at 32.15. Well, no, that's too high right there from where we're at. We're looking on the daily chart. Let's look on this 2-hour chart. I just don't see what we're going to see with those jobless claims. That suggests that the momentum's still coming along. It's going to be last month's figures, but the jobless claims suggest that we're still moving along. We're going to go with right here at 31.87, 31.87 on a stretch up here. But frankly, I don't really see it. But that's where we would stretch it to. Where the key test would be. Let's move into the Aussie dollar. Well, we'll get a little bit further upside move, but not really much as you would expect. I mean, we compare things like the dollar yen, which is going higher for different reasons, but the Aussie should see better impact, at least initially. And we're not really seeing it as much. We're just simply not doing that at all. The resistance would come in right there. See, 71.65, 71.65. With support, I don't see that. I would think that the downside was rather limited. So we're going to say 70, 78. Boy, we continue to slide here on this Kiwi. Support's going to come in there at 67.18. 67.18 for now. And resistance would be 67.95. Swiss is trying to make a move a little bit higher. It hasn't responded as much as, let's say, that the cash dollar index has. Not that dollar index is taken off higher, but you would expect a little bit better rebound here. Sometimes you get that risk aversion, but I don't even know we'd be getting the risk aversion considering you've got equities at these highs. The only thing is probably with what the status is, if you look at the overall status for the SMB. Looking here for resistance, looking at par 38, let's look at a 2-hour chart. Just right there. And it isn't even that much higher. Split the difference. You see this coming right across here? There you go. There's the par 38. So support right there in the middle of all this is going to be 99.55. From here, we're going to move on to the dollar CAD. Now, we do have Canadian jobs out this morning. So we have both sides on a tug and pull. Canadian jobs due out today. U.S. jobs due out today. Crude oil may be starting to give a little bit of its upside momentum. It's not certainly not falling apart, but certainly looks like the key on this one's going to be we need that daily close above 33.54, and we probably at this point, if you think with crude maybe starting to ease back a bit, we may go in and get that, but it's not coming off very much, not very much at all. But the key is going to be 33.54 for a close, if we can get that. Resistance right now is going to be this 34.15. That'll be the first key initial test if we move higher. With support, well, it's our old friend 3308. If for some reason we get strong data, it doesn't mean we couldn't take out 33, but if for some reason, let's say the U.S., which I'm be a bit surprised we saw a surprise lower number, but let's say we saw a strong Canadian number coupled by a not so great U.S. number, yeah, we could go in and break to these new lows here. Test these lows here at 32, easily take out this 32.96. But the key will be the 2-hour close at 33.08. So we'll just go with 33.08. And let's go with the dollar peso. This has been all over the board. And continue, I mean, all week long, it continues to stay all over the board as we talked about these extreme moves. Yesterday we had it up as high as 1932, but the market topped out at 1928. Actually had a resistance level here. I thought they might even try and push it, but they came up short of that 1932. You got to watch. Someone was asking about this, or someone's in the room, and they were still going to stay long. I said, "Hey, look, you got to watch." And we were just below this 1920. I said, "You got to watch this 1920 close because that's working like a pivot." And we continue to push lower, and look at that, they're still dripping lower. The risk is that we try and break even lower and test this area here, so we'd be looking at 1906.7. But I'd be careful on this one because it's been all over the board. Resistance, well, there's our friend 1920. On a bounce back, the resistance would come in right there, 1922. And let's go moving to the dollar yen. The key is going to be 1187 to me. It's all about 1187 and how they close above that. But certainly the momentum is going its way. But oh my goodness, I feel bad for those that were short and just kept hanging on because it's been torturous because this thing doesn't want to pull back. 1136 is key for support. We'll take a look at the 2-hour. Now, if we saw a surprise number be 1131, that'd be a heck of a surprise number. That it's gonna be 1131. 36 is key on the daily, but we'd go with 1131. Momentum's still going its way. It would certainly turn things around if for some reason we got, but it just doesn't seem in the cards. I mean, with that jobless claims, they're suggesting that the momentum's continuing. On the upside, we'll go with 1196 here. Right there. Let's move into the cash dollar index. Look, if we get a good number, we're on tap to go to this 97.90. And that's this level on the weekly, and it's also the 61%. So once again, on a stretch, I think that I'd be looking at that 97.89, which is this level on the weekly. You can see it right there. and the 61%. Now, that being said, if we make that run up there, I'm not sure that we'd get continued follow through because we've had so much priced in to this whole US-China news that I think people are starting to say, hey, look, I don't know if there's a whole lot left. Whether it's going to be the equities or whatever doesn't mean that things turn around and go in reverse. Let's say the equities or the dollar index. But I think if it gets up there, it would have a hard time trying to get beyond that. So we'll go with 97.89 on our stretch levels. Support, we see the support. Well, I think we're going to stay. I'd be surprised. I don't see how we're going to break all of a sudden lower. But if we test, it's at 96.85 here. It's actually 96.86. We'll adjust that by one big whopping pip. Let's go and move into the gold. If the dollar takes off, I think gold would get spooked pretty good if the dollar took off. And we'd make a visit down here to this 1267. Let's see if there's something on the 2-hour chart. Yeah, 1272. So we'll go with 1272. The dollar takes off. I think that's what we make a run down to, which would get past that 75. Well, they're hanging around this 1292 right now. This level here remains key. Hang on. We'll just give it 1295. And let's go into the crosses. Not seeing a whole lot of movement. Eventually we may move back up here towards this 8606. For right now, it's going to be 8602. Market trying to make a stand. After we took that dip, we came right back up. Support, if the euro turns around and takes its own little dump, is going to be right there at 85.48. 85.48. Looking at the euro yen, well, we've made that move up here to this 25.48, and looks like we could potentially move in a little bit higher. We'll see how the data plays out. Let's just go with this 25.60. We're just going to go with this 25.60 to 61%. And support's going to come in right there, 25.22. Keeping it pretty tight. Actually, just a nudge a little bit lower right there, 25.19. Let's go and move into the euro odd. Now this looks like this could start to break lower here. Yeah, we're going to go 57.02. Key resistance coming there at 58.08, 58.08. Well, this market continues to add on here. Look at this. We jumped up here into this 66.24, and I was looking at it on a very, very short-term basis. Actually, a couple of nights ago, we were just dancing around here. And I saw it when I made this run up in here, and I thought, oh, I looked at it, and it goes, looks like it eased back a bit. And it did ease back, not a whole lot, but look at this. And boy, have we popped up. We popped up in a good way. Well, because, you know, the Kiwi itself is having its own problems. Now, we do have some resistance here. So I would take this into consideration right here. Longer term, we could probably continue to advance, but let's see what happens with the euro. Well, we got 66.26. Let's go with that, 66.26. Support now is right there, 66.19. Well, we're moving higher with this risk on with the Aussie yen. You know, remember this market looked about a couple of weeks ago looked like it's getting ready to fall apart, and we're certainly moving higher. Key resistance is going to be right there, 79.75. Right there, 79.75. Support comes in right there, 79.17. Actually, remember what we talked about this yesterday, 79.16 and 79.06. So we'll go 79.16. Obviously, the Trump comments and also the comments coming from Chinese president certainly pushed this higher, although it could be a screaming higher, and it certainly isn't. Let's go into the sterling yen. We seem to be trapped a little bit here in this tight area here. For right now, resistance is going to come in right there at 46.50. Had a little good run here, but I mean, on a very, very short-term basis, looks like we want to maybe back off just a bit. But you can see here, we're already starting to advance. For now, on a short-term basis, that's going to be the support there. 45.97, 45.97. We come down, test it, maybe try and push, maybe make one more little push. It's going to be 45.97. This market looks like it wants to rotate lower here. Resistance is going to be right there at 84. This is going to be an interesting one because I think the downside probably be limited overall. In the short term, maybe there's a little bit of a, like I said, the advance for the Aussie. Downside support is going to come in right there at 83.18, potentially where we can go to 83.18. Now with the woes with the Kiwi, we're certainly giving a little extra push here. Resistance initially here, 94.42. but I think we're going to end up pushing higher here. Right there, 94.74 for today, 94.74. I think dips will be bought right down to here, 93, 93.79. And let's go and take a look at Blake's trade. Seems to be doing very well. The Aussie New Zealand dollar. Look at that thing rip. It's still just blowing and going. Golly. He'll be happy when he wakes up. So going into the NFP report, the key that we're going to want to focus on is going to be the job growth. Because if we do see that job growth, then where the Fed's saying, hey, we're going to take a pause, it doesn't shift them like we're going to go on and hike all of a sudden, but it certainly makes them think, well, wait a minute, maybe we are going to have some inflation coming down the pike and could open the door, at least where the market says, hey, wait a minute, maybe there could be one more hike if there's additional gains as time goes on at the end of the year or towards the end of the year, maybe in the fall. So that would really change the complexion and would then go on and shoot the dollar up to that 97.90 without any trouble whatsoever. So keep an eye on that's going to be the one thing you want to focus on, not only the strength of the number, but also on the wage gains. That'll be key. As far as the euro, I think that if we do get a good number, especially if we get good wage gains, we're going right downstairs and taking out these lows. I just don't know, at least for tomorrow, I mean today, will we have much follow through for 1149, but we'd be going down to that lower number. So the key will be not only the number, if we do on the revisions for last month, if we do get jump up, doesn't even have to be a huge jump up, but maybe I think it was 28,000. Let's say we get a jump up to, let's say, 78,000. It's still going to look positive. And my concern is also that with the jobless claims, because it's indicating that although the NFP looks 1 month back, or it's last month's figures, the momentum's continuing. So that's the issue here. So we have 49-year low on the jobless claims. So if we get good jobs, wage growth, that's going to show that momentum is going to keep on going. And like I said, where the Fed said, okay, we're now going to take a pause. Now they're going to be saying, well, they can't take a pause. They may be just easing, right? Not easing, but sitting back. But really, the door would be open then for potentially one more hike in the fall, if not late summer. So it would kind of spin things around, and then it would end up sending this dollar index lickety split to this 97.90. And that 97.90 and we're looking on a weekly chart. You can see that's a nice target right there for them to go to. That's also the 61% of the move from 88.29 to 103.83. Well, that's all we have. We'll go and get the buy chart posted. Good luck with today's NFP. And thanks for joining us here on the European Crossover webinar.